It's going to be a very busy week in Lagos for the Securities and Exchange Commission and other stakeholders who today begins a three-day get-together to Thursday's launch of Nigeria's three-year Green Bond Market Development Program, which will be situated at the FMDQ OTC Securities Exchange. The SEC and the FMDQ today is holding the first in a series of roundtable sessions in Nigeria's financial capital, Lagos, looking and explaining the concept of green bonds as an alternative financing instrument and integrating the principles of green financing into Nigeria's debt market. The market-wide plenary will be held tomorrow, Wednesday. Then we'll get ready for the program launch on Thursday. Meantime, the suspended head of the SEC, Monero Guazo, today goes before an Abuja High Court on charges of unauthorized severance emoluments brought against him by the Independent Corrupt Practices Commission, by the acronym ICPC. Meantime, the former SEC Director General on Monday filed papers against the suspension last year by the Finance Minister Kemi Adeosun at the Nigerian Industrial Court, and joining in the suit is the country's Attorney General. Guazo is asking the court to look into a number of issues, whether the Finance Minister's powers to suspend him was constitutional and okay. As the head of the SEC, he says his appointment was made by the president and not under the office of the Minister of Finance. So Guazo is praying the industrial court to declare his purported suspension as illegal, unconstitutional, unlawful, and beyond powers of the Honorable Minister of Finance. Guazo is also asking whether public service rules used by the Finance Ministry to suspend him is applicable to persons holding office of the Director General of the Securities and Exchange Commission. And he's also asking whether the panel of inquiry set up by the Honorable Minister of Finance was properly constituted to be fair and impartial. And Guazo wants that panel of inquiry, which he says was biased, partial, and against the principles of natural justice, to be set aside in its entirety. Meantime, Nigeria's Vice President, Professor Yemi Osinbajo, speaks on land reform as a catalyst of abundance and lasting prosperity. And he says, while building consensus around necessity for land reform is easy, exactly what these reforms should be and how best to proceed in implementing them has always been more complicated, yet more important. The Vice President told delegates at the Land Reform Conference in Abuja on Monday that the role of the state or the government as the primary guarantor and enforcer of the integrity of land and property rights that are created from it is indisputable. However, at any point when the administration of land no longer meets the aspirations, it becomes incumbent upon the state to take the lead in initiating and overseeing some form of improvement or reform to the system, even if that reform is one that will ultimately end in less government control. End of quote from the Vice President. So we saw the stock market made a very gentle comeback, 0.37% yesterday. We're still in the negative territory, 3.37% as we see another trading day getting started. And very gently we're seeing the yield curve moving as far as the treasuries and Nigeria's Naira bonds concerned. And let's get a bit of a sense of the markets in June as we get Michael Famoroti, who is the chief economist at Vetiva Capital Management, bring us up to speed regarding that very little report that was published on Monday. Michael, it's good to see you, and thanks for coming through on the show.
Pleasure as always to be here.
Yeah, thank you. Let's start with equities. What are the key issues for investors at this point, whether I'm on the equity side or I'm on the fixed income side?
Well, so I think on the fixed income front, the primary concern or the primary consideration is CBN liquidity mop-ups. I think yesterday we had the third consecutive OMO auction, and we haven't seen that spate of OMO auctions in a while, and it may be signaling that the CBN is looking to be a bit tighter with system liquidity. We do know that in May, yields were up about 50 basis points across the curve, and after a couple of months of yields heading south, we've seen a bit of flattening, and if anything, the trend has been slightly bearish. So I think a lot of traders in the fixed income space would be looking at inflation, yes, but more specifically at CBN to sort of gauge what direction they are looking to push yields and whether they're happy at these levels and if they're going to allow a bit more liquidity in the market to drive buying. For the equity space, I think it's going to be business as usual as we saw in May. I don't think the market has any catalyst coming in that's going to alter the sort of trend that we have seen, and we are likely to be seeing a bit more selling in June, even if we do see some positive closes.
Yes, some positive closes like we saw yesterday, formally taking off the new month for us. You think what we saw yesterday was just a blip and not a trend?
Yeah, I think it's definitely not a trend. Markets rarely lose for 20, 30 straight sessions. So even when you have their runs, there's still some positive closes in between as some investors look to cherry pick and bargain hunt. And I think we saw that yesterday. The close wasn't particularly large. I think it was largely driven by positive trading in Nigerian breweries. And we may see some more minor positive closes, but I think the general direction is going to be mildly negative.
What are equity investors locally, folks with deep pockets, and I'm not talking about the institutional investors like the PFAs and the rest of them insurance, about the ordinary guy on the street who have some large amount of money who says, look, what's going on at the equities market? What are you telling them? Or what are they telling you?
Well, I think the reality with the equity markets is that we came into the year expecting it to be driven by the macro space. I don't think the macro outlook has changed too much. What has become apparent is that the pre-election season is playing a larger role and its shadow is looming significantly on the market. And I think the reality is that domestic investors have taken a cue from the foreign guys that have taken their cash early. And because of that, as we've seen in the last couple of years, when the foreign guys are quiet, the market doesn't see a lot of activity. So the sort of view is if you're still interested in the market because, fundamentally there are lots of attractive prices, a lot of stocks are undervalued. And if you have the patience and the belief in particular stocks, then, these low levels are a relatively good time to go in.